Hi, good evening, everyone. Sorry for that. Hi, thanks, Mark. Today we are here to speak about retirement. I've been living and working for the last 20 over years. So to think of retirement, it seems, none of my business because I was, relatively young, but, I'm turning 50 really soon. So I can't help but to explain that during different life stage, you tend to look at things very differently. So I have a very first questions for everyone today. Let's see whether you can get it right. What is your number today? The question goes like, what is your number today? What is your answer? Well, today is, I think, 5,000 over cases, right? But I'm not referring to that. Even though we are paying a lot of attention to the number of confirmed COVID cases or, the variations of a set of numbers. But in this new norm, when you are paying attention to COVID or to the reopening after the vaccination, are you looking at your own retirement numbers? During this period, you are counting the COVID from below 10,000 to 20,000, and it now goes down to below 10,000. It's quite good news that it keep coming down, showing good positive indication. But during this period, are you really paying attention to also your retirement numbers? I was young before, I was really young before. And when I was in my 20s, I say, I am too young. You only live once. So retirement at that time is not for me. I've got plenty of time. Why are you talking to me about buying retirement when I'm 20 years old? I should be out there having fun. Saving and thrifty doesn't ring the bell for me. Then when I go to the next stage of life, I realize that they're just too much expenses. I got to cope with my credit card, my car loan, my housing loan. I got to take care of my future. That includes my family members. And then very soon I realized that guess what? The children education is really costing me a bomb. For a kid to go to university, you are talking about $500,000, if not more than $500,000, depending on the cost and the country that you go to. So you are working really hard, but that goes to your children's education. So now, ladies and gentlemen, thanks for staying on the line. My question to you and to everyone right now is, where and when should your retirement planning comes in? How much do you need at the age of 55? How long will you live after retiring, let's say at the age of 55? And you see from this life stage, are you preparing yourself? Like how you prepare for the new norm, the new SOP. Are you preparing for your retirement planning or not? Or maybe now, when you are, near my age, yes, I'm supporting my children. I'm supporting my parents. I hope I'm supporting myself really well. So if you fall into any of these scenario, don't be trapped, because anyone can actually save or invest for retirement. And the key words is the earlier, the better. All right, I will illustrate that to you. So, speaking about, average age, so the life expectancy are increasing. So you age and you live longer, and you age, but you want to age in a fashionable manner. You want to age with some, with some control in life. You really don't want to be left alone and be a burden to your children. I know if you are counting on your children for your retirement, not only you cause a pain to yourself, you cause a pain to them. So, if you retire at the age of 50, that is another 25 years to go, because the average life expectancy is 76 years old in Malaysia. All right. And, if I continue with the next slide here, women somehow live longer than the men, all right, by a few more years. So as a couple, or maybe as female, male, it doesn't matter, you need to get yourself ready, to have a retirement spending after your working life for at least 20 years. Let me do my max again, for at least 20 years, because you retire at the age of 55 and you go on for the next 20 years, and then hopefully you are still healthy, and I'm sure you do, and continue living up to the average of 70 plus or even 80. So now, what is your number? Is your number enough to feed yourself and your loved ones? Well, this is going to tell every one of us here that there are some torpedo hitting your retirement plans. The missiles, sometimes not visible, but the missiles is going to attack. The black swan is going to happen, and the torpedo is going to hit down and sink your retirement plans. And this is one of the torpedo: high medical costs across the regions, across all countries. If you live healthily and retire healthily, mentally sound, physically sound, that is good. But if you are not, accident can take place, your engine can get very old and rusty, and insurance may cover you for quite a fair bit. But if these very sharp missiles go ahead and you are on attack, guess what? Maybe 10% or 20% of your lifetime retirement savings will be hit. And that is a serious issue, because you no longer have the means to work as before, and you don't want to start looking for part-time job, multiple part-time job at the age of 55 or 60. Neither, as I said, you want to cause a pain to your children, and that is the last thing that we really want to do. Oh, let me continue with this. There are a lot of issues post-retirement. Before I continue, I really want to ask anyone here, what is your ideal retirement age? Is it going to be 45, 48, 50, or 50 plus, or 60? Okay, whatever the numbers that you have chosen, good. There is a post-retirement for individuals, and there are some needs. Well, how long you are going to go on living? And like now, prolonged low interest rate environment is going to give you low rate of returns if you are investing or savings. Inflation is going to be high. Like what we have seen right now, things are getting more expensive. The oil price are, going through the roof, for example, and there's possible saving shortfall. There are many people that I know of. The moment they hit their retirement age, they withdraw their pension fund and they start renovating their house. They change a car, an average car, and that sponsor the children, either for educations or maybe for the down payment of a house, of a car. So the money can just go off like that, all right, quickly without you realizing it. But our needs are a sustainable income stream all the way up to age 75. And we want to be well protected by inflation. All right. So some of us may think capital preservation is very important. However, if you are looking at 20 years down the road, you know, it's not just capital preservation that is key, but at the same time, you still want to grow and accumulate from your capital. All right. So there are a lot of post-retirement needs, and how much is enough. From the screen, you can see there are a lot more torpedoes that you may not be aware of. Number one, inflation rate, 4.4%. The things, the coffee, the food, general consensus, inflation at 4% is not exaggeration. It is quite fit. Secondly, if you look at our banks, Bank Negara's overnight rate or the commercial banks FD interest rate, it is not going to give you that expected return that you want to even just beat the inflation. Children education, we spoke about it. Medical, we spoke about it. So are you ready? What is your number? As simple as it can be seen, are you ready to put aside 500, let's say, every month, or 2,000 every month? It doesn't matter because it is your number. I don't know you are on the line, okay? Unless you review, your actual situation. Otherwise, I would think, saving for 1,000 or 2,000 per month sounds quite reasonable. All right. And, we need to recognize there are many segments of Malaysians' populations. The B40, the M40, the T20. And recently, the press member has been asking me the same questions. They get me to answer to their interviews, and this is just one of them. The questions goes like, in this unprecedented pandemic era, is it wise to withdraw EPF, your savings in your pension funds? Is it wise or not? Is it an option or not? To me, of course, if you have other options, this should not be even an option to consider, because this is a retirement pot. In my mind, I'm not even thinking about the existence of these assets. It has been put aside. It is there, and I cannot touch and I cannot mobilize it at all. All right. So, the program, the government's stimulus program, supported by pension fund, is meant to really help those without way out, be it the Lestari or the Citra. Those programs are suitable for those people, but not for anyone who can still find their ways to fight until you really drop. Okay, so it's really not an option as far as I'm concerned. So now I want to get into some mode of having some quiz with you. All right, let's see whether you get some of these things right at your fingertips. Question number one. To double your capital in 7.2 years. The question should go like, how long will it take to double your capital with the current fixed deposit rate of 2%? Let's say you have 100,000 with you, and you put in any bank's fixed deposit, they give you 2%. Your 100,000, how long does it take to become 200,000? Okay, that's the quiz. Rule of 72. What's the answer? Okay, so I'm sure many of you get it right. The answer is 36 years. So can you imagine this? You started working at very young age, let's say at the age of 20, and you work from the age of 20 all the way to 56, 36 years old, and you make good income, and profits, salary, wages, bonus, you name it, 36 years, and you make some good money. However, with interest rate of 2%, it took the same time just to double your capital, 36 years. And it's just too long. So what can you do about this? Is to increase the rate of return. If you are able to increase the rate of return by maybe doing some investment, increasing your risk, speaking to the advisor, speaking to FSM, maybe there are plenty of good choices that will grow your money at a faster rate. Then you don't have to wait for 36 years. Just now I've mentioned this is rule of 72. If you get to a rate that is 7.2%, all right, 7.2%, it only takes you 10 years to double your same 100,000. All right, I hope you get that right. Okay, question number 2. Okay, so let's see this. Retirement saving, Gary versus Simon. So Gary, someone like me, age 35, invest 1,000 monthly for 30 years. All right, total contribution is 360,000. Yeah, 30 years multiply by 12 months by 1,000 each month, you get 360,000. Then assuming rate of return is 8% per annum. All right, the total interest is 1.140295, and the total sum is about 1.5 million. How about Simon in this case? So Simon, same amount of monthly investment and the rate of return is the same, 1,000 a month, 8% return, but instead he started way earlier. He didn't start at the age of 40. He realized the importance of compounding returns. The earlier you start, the better it is. And make a guess, while Gary has got 1.5 million in this case, how much will Simon be able to accumulate? What's the answer? 1.5 million versus about 3.5 million. So you start earlier with the same contribution, with the same rate of return, is another option that how you build your retirement savings. Number one option, increase the rate of return. Number two, start as early as possible. Look at Gary and Simon. The difference is 2 million ringgit, which is a lot. All right, the rule of thumb, the next quiz that we have here. So to figure out how much do you need in retirement, the rule of thumb is to divide your needs, your personal needs, by 4%. So let's say you are spending 5,000 per month, equals to spending of 60,000 for a year. So if you want to continue spending that 5,000 into your retirement age, how much real value of money do you need to have today in order to last for your retirement life? Well, I have given you the answers. The rule of thumb is to divide it by 4%. All right. So 60,000 divided by 4%, the answer is 1.5 million. That's the same saying of if you have 1.5 million today, ladies and gentlemen, then you can comfortably, okay, withdraw 5,000 a month for your retirement. But the next big question will be, is 5,000 enough or not? If 5,000 is not enough, you think it's going to be 10,000 ringgit because you want to travel the world, you want to buy your wife some and your spouse some good food, good supplements, and also give your children and your in-laws some good dinner and good holidays. 1.5 may not be enough. You need 3 million, because that 3 million will give you 10,000 a month, which is not a lot. All right, next, income replacement ratio. So what is the common consensus towards the requirement of income replacement ratio? Meaning, if you are earning 5,000 today or 10,000 today, all right, and you continue earning that, all right, during your working life, the moment you retired, all right, the moment you retired, you don't have to go out so often, you don't need to work, you may not need to entertain, you cut down your expenses, but how much do you really need the moment you get into your retirement lifestyle? As you spend 5,000 or 10,000 now, what is the ratio that you need? Well, it depends on individual, but the consensus says 60 to 70%. That means at the age of 54, all right, if you are spending 10,000 a month as your lifestyle, the moment you retire at the age of 55 or 56, you still need 6,000 to keep up your lifestyle. That is a consensus. You can't be locking yourself at home and don't go out for your food, for your favorite places, or to hang out with your friends. So the lifestyle will continue while your paycheck has stopped. So you see, the whole concept about retirement saving is about the rate of return, is about getting it early, and it's about don't underestimate the amount of retirement savings you need today. 1 million may not be a lot. 1.5 million may not be enough, but depending on your lifestyle. So let's look at this. This is a US research. So this is a US report done all the way in year 2002. But I thought it's quite interesting. So the retiree in US, they went through a survey and a research. So they were being asked of questions like, how are you doing in your retirement life? So, if you look at the pie chart, or I call it the donut in this case, 32% of the respondent actually says their retirement life is sick and tired. Do you want to be in that category? If you don't want to be in that category, you got to take action today. All right. And the next at the bottom, 22% goes like, oh, I only live for today. I don't know what is going to happen tomorrow. It goes day by day. Let's see what happens tomorrow. That type of retirement life. And 27% are ageless explorer. That means they continue looking for job. They continue hunting for new stream of income. Maybe even at the age of 65, 70, they continue to look for a job. So 27% plus 32% plus 22%, that is 81%. 81% of this survey, all right, shows that the retiree are not having a decent life upon retirement. Only 19% of them says comfortable. All right. So we want to be in that 19%. So what do we do? All right. So I'm from Manulife Investment Management. We are a global asset management company and a pension solution. So globally, worldwide, we manage more than US 1 trillion. So that is about 3 times the size of Malaysia GDP. All right. So we operate in Canada, in States, in Europe, in Asia. We operate in 10 countries in Asia, US 1 trillion. And globally, we offer a pension solution. Be it in Canada, we are one of the top company. In Hong Kong, we are the #1 company. In Indonesia, we are the market leader. In the States, we are a well-known company under John Hancock. In Malaysia, we are also a pension fund provider. So globally, we have the expertise. You know, we have gone through and we have seen a lot of these retirement savings or retirement investing episodes. And in Malaysia, you know, we have got this product designed to actually in some way force you to save for retirement. And it's called private retirement scheme. Private because of it is you know, it's very individual, it's private, you know, it's not from any sponsors like from governments or from your employers. It's private, it's you, you know, and it's a retirement scheme. So how does it work? You know, it looks a little bit like our national pension system. You have got account A, you have got account B, and this is voluntary and this is for long term. It is really aimed to help Malaysians to invest and save enough for our retirement life. And for that, our government actually provide tax incentive, meaning if you put your money into PRS up to 3,000, you actually get tax benefit on that 3,000. Otherwise, you got to pay a couple of hundred ringgit to the inland revenue. So this is a government's initiative to our PRS. So when you contribute, open an account with Manulife, you know, you put your money in every month or every quarter or during any time that you feel comfortable. All right. You will have account A and account B. There will be a split of 70% and 30%. So if you do it 1,000 a month, next month 2,000, that is fine. Or every month on a 500 ringgit basis, that is fine. When you get a bonus, you put in 10,000, that is okay. 70% goes to account A, 30% goes to account B. The difference is when can you withdraw? You know, the account A, you can withdraw under certain situation and scenarios. Account B, you may withdraw for more general purposes. All right, so that is a difference. But you know, to me, I have got a PRS account. I have never thought about withdrawal. In fact, I don't look at my statements. I really treat it as not in existence. I will find it when I reach the age of 55, 60 years old. I will look for it, but you know, not now, definitely not now. But this is how it works. Your money is actually managed by us, but it's the scheme of PRS that is safeguarding your interests. Okay, so you know, we have came across customers, clients, and friends out there and say, yeah, you know, I think fixed deposit rate is low. I believe in retirement investing, but you know, I'm not exactly sure what stocks to buy or what kind of investment vehicles should I be investing into. Well, as I was sharing with you, we have got many experience of providing pension solutions to worldwide customers of ours. So this is what we call a default option. We have designed all right, a default options for our customers who didn't want to make a choice. What do I mean, don't want to make a choice? It goes with your age. So now, if you are young, all right, if you are young, you are below 45, you go into a basket of investment that we call it a growth portfolio. So the aim is when you are younger, we buy more stocks, for example, buy more equities, for example, to grow your retirement funds. All right. But when you turn 45 years old, going to 54 years old, we will automatically switch your PRS into moderate portfolio. So that is a more balanced portfolio without taking too much risk, because you are now entering into a second phase of your working life. And when you enter into the last phase of your working life, we will make your switch from moderate to conservative. So this is closer and closer to something like FD plus, higher than fixed deposit. So fixed deposit plus, maybe fixed deposit plus 2%. So that is conservative. So this is a good solution because you don't have to care about what investment is good today, who is making the choice. This is basing on a proven methodology that when you are young, you go aggressive. When you are at middle age, you go moderate. And when you age and you want to age gracefully, we go conservative. So that is our plan for you. If you are not making an explicit choice of what you want. But of course, you can make the choice of, I don't care. No matter what, even when I'm age 50 or above 50, I want the growth category. I want the growth portfolio. Can you make the choice? Yes, of course you can. However, if you are not making the choice, we call these default options. We give you the extra service to actually switch out for you, all right, when you age with the plan, all right? So that is the solution. So who should be putting money into PRS? All right, individuals, be it young professionals, freelancers. Remember the Gary story and the Simon story. So retirees. So people are questioning, do I have enough? Do I have 1.5 million so that I can spend 5,000 per month in the future? What is my income replacement ratio if I'm now earning 20,000? That means I may still need 15,000 after my retirement life. So any category of individuals, we think there's nothing wrong to invest and save for retirement, because you can never expect how much do you really need. Remember, higher medical costs, children education costs, inflation costs, medical costs, unless you are so traditional in your thoughts that the best retirement tools that you want to rely on is not your PRS, is not your pension fund, is not your property, is not your asset, but your children, unless you are thinking like that. Otherwise, you got to do something. For employers, any one of you who are employers here, or you think you can influence your employers, actually employers are encouraged to contribute more, okay, more than your mandatory EPF contributions into something like PRS. Because in PRS, you can choose your fund, you can diversify. So employers also get some tax benefit by contributing to your retirement plans. It's part of your employee benefit that if your employer is caring, or you as employer is caring, you can do this for your employees. All right, so let's continue. So what can you do with that? It's flexible. You can top up anytime. You can stop anytime. The money will be there. You can do switching in between the funds, the growth, the moderate, the conservative is just 3 funds that I mentioned to you, but there are more than that. You can do free switching. And remember the account A and the account B. So the account B, you can actually withdraw it should you really find the emergency of money. So you can pre-withdraw subject to a penalty. All right. The penalty is not imposed by us, but imposed by a government agency. All right. So the PRS will benefit you in a few ways. Number one, you get your tax relief. Otherwise, you are contributing more to the inland revenue. Number two, it is very well diversified and automated a pension default plan for you. You know, we autopilot for you. For Manulife, we have got 8 funds. Just now you have seen 3 funds that is conventional. You know, we have got 3 funds which are the same but under Shariah principle. And later on, I will show you 2 very special property funds. Because when we think about retirement, we think about property. In many cases, we think about property because we think property is one of the most reliable assets for retirement. Okay, so I will speak about that. So there are other benefits like for employers, you know, there are tax savings and there is a vesting schedule. If you need to know more, you know, talk to us. Yeah, this is the tax relief of 3,000. So let's look at the PRS product in greater details. Just now, we say there is these default options that we will switch for you according to your age. So if you are under the growth category, what we as fund manager are really doing is to invest about 30 to 70% into stock market because we believe stock market will give you the upside. All right. And at the same time, we may invest 30% of your pool of money outside Malaysia. That means we invest in Asia, we invest in global, for example. And when you go into moderate, that means the second phase, I need to be more careful. So we cut down your equity exposure. Just now was 70% maximum and now is 60%. And when you move into the conservative pot, you know, we don't take so much equity investments for you. In fact, we actually buy more fixed income instruments for you to be safer. All right. So we have got exactly the same, but this is a Shariah compliant portfolio. So it's the same growth, moderate, conservative, buying only the Shariah compliant portfolio. All right, non-Shariah is not permitted. So this is a Shariah growth, moderate, and conservative solution. And now I want to speak about property. And I think this is the most interesting one. All right, because we have got 2 PRS funds in our portfolio. One is called Asia Pacific REIT. REIT stands for Real Estate Investment Trust. This is Asia Pacific. I have got the other one that is covering global. So in US, in Europe, and also Asia, you have it all. All right. So let me speak to you a little bit about, So this is Asia Pacific, as you can see from the headlines. And this is global. All right. And what is REITs all about? Simply put, all right, there are buildings, big buildings, or many big buildings being listed in the stock exchange. All right, it can be in Singapore, it can be in New York, it can be in Hong Kong, it can be in China, it can even be in Malaysia. We have quite a few REITs in Malaysia. So, for example, actually Pavilion is a REIT. So if you invest Pavilion REIT via the Malaysia Stock Exchange, you buy one lot of Pavilion REIT, you are a joint owner of Pavilion property that is listed. So as you are a joint owner, capital appreciation, we know when the capital appreciation over the next 5 to 10 years, the building appreciates in value, it is your return, it is your profit because you are joint owner. All right. At the same time, you see many tenants in the shopping mall. All right. The tenants pays rental and the rental incomes goes to you. All right. And our REITs funds are pure REITs fund. We only buy REITs and Asia Pacific REITs, global REITs outside Malaysia. So what is the advantage? You don't have to come up with 100,000 as down payment, signing sales and purchase agreement, looking for tenant, think about whether your tenants are good paymaster or not. You get rid of all those things. You just put your money regardless of the amount. All right, you can start with 1,000 or 2,000, but you own properties worldwide. So that is REITs. So you see, in this new normal, all right, you have got all kinds of very attractive REITs. Some are related to 5G and 6G. Some are related to e-commerce and Internet of Things. Some REITs, all right, are big buildings housing data centers. Cloud is not up in the sky. Cloud is in the data center operating on the ground. As you buy a lot more from Shopee, Lazada, or Amazon, you name it, warehouse REITs, logistic REITs are very popular, meaning, people, businessmen are renting from their warehouse, from REITs company, their logistic, their shipping are housed under REITs. So these are the new norm REITs. And of course, you have got your shopping mall, office towers and hotel, residence, condominium and shop lot, telecommunication towers. I invest in one of the REIT counter in US. I own something like 200,000 of that telecommunication centers and towers that you see in this slide. So, I also get exposure into data centers, logistic warehouse, medical center REITs. These are all the REITs, all the properties that may not be related to your own property, be it terrace houses, bungalows, semi-D, shop houses, or a piece of land. Here we are talking about billions and billions of property. Even by just buying a handful of REITs, you get exposure in US, Australia, Singapore, Canada, Asia, Japan. By having small investment, you get worldwide exposure. Hong Kong properties are very expensive. We know that it's not easy to buy one unit of Hong Kong properties. But if you go through REITs, you get many, many lots, many, many buildings in Hong Kong and beyond that. All right, so our global and Asia Pacific REITs. So you see, data center and telecommunication towers are beneficiary of the new norm. All right, industrial REITs, warehouse, industrial parks, logistic hubs, these are REITs that is benefiting from today's new norm because you go through e-commerce, you require shipping and logistic to get your goods. And people, require medical centers and medical homes. This is getting very popular. And the developer are not building this and just sell it away. Some developer are building it and list it in the stock exchange for people like you and myself to invest in the listed REITs. So those are opportunities for us, all right, to own this property and meanwhile collect the rental income. The rental income alone, on average, is about 4 to 5%. So that is double or more than double than your bank's fixed deposit rate now. If you look at our Asia Pacific REITs, we have been paying dividend very consistently. This year, we pay out dividend 7.2%. Last year, it was 5 to 6%, and this year we pay 7.2%. So that is about 3 times your fixed deposit rate, and that is just rental income. I have not spoken about the opportunity of the buildings that you are seeing from the screen that can appreciate in value. All right. So now, okay, you get properties exposure worldwide. Americas, Europe, Asia, Australia. I don't think we have much in Africa, but you get worldwide. All right. So we have got 2 REITs in our PRS fund. One is called the Manulife PRS Asia Pacific REIT, focusing a lot more in Hong Kong, in Singapore, in Australia, in Japan. All right, for example, the one on your right-hand side, Global REIT, focusing in, other than Asia, the US market and the European market. All right, and we pay rental income in February, August, May, and November into your PRS investment account with us. Last but not least, I really like the REITs proposition because I'm a lover of property, but I don't think I can buy worldwide property, amounting to billions, 100 billions, and trillions worth of property exposure. And I really want to get this for my daughter because, I think if I invest in this, that is worth 100,000 today. When I pass it on to my daughter, or when I need it for my own retirement, it may worth 500,000. And not only that, we offer free insurance. So when you get into Asia Pacific REITs, we give you a free group term life insurance. And if you get into our global Shariah REIT, all right, we give you 4 times group personal accidents insurance for free. So you are covered by being our PRS REITs member. So with that, I think I'm coming to the end of this. Let me check whether are there questions posted afterwards. But if I can summarize in this, especially the REITs fund. REITs being property, something that is very tangible, and something that is huge, is very stable and growing dividends, because the rental income will get more expensive over the longer term. The towers, the warehouse won't get cheaper in terms of rental income. Long-term investment growth, price appreciations looks very lucrative, and you got diversification. I haven't shown you just one example. If I can show you even with just one example right now, let me quote a name. Let's say American Tower Corp. American Tower Corp owns that tower buildings. Immediately you own something like 200,000 building of that. All right. There is another company by the name of Mapletree. So Mapletree is listed in Singapore. They have got a lot of properties that includes about 20 data centers, huge data centers in US. All right. So the data center is yours. The rental is yours. So you got diversification and you get yourself exposed to current and long-term trends. We are the fund managers. We are your pension solutions provider. We will take care of your returns and we will make sure we grow, up to your expectation, so that when you reach retirement age, you retire gracefully and you retire meaningfully. All right, that is our aspirations with you. So retirement is a blank sheet of paper. It's a chance to redesign your life into something new and different. You got to start today because the moment you walk out, it will be like, all right, I'm too young for this. I will do it tomorrow. I got too much debts. I'm very happy with FD. And there's no chance to redesign your life into something that is new, more meaningful, more purposeful, and different. So with that, I want to say thank you very much for tuning in tonight. And thank you, organizer. Let me look at the Q&A box. All right, let me read out one of the questions. All right, Mr. Ng, what are your views on possibility on high inflation and significant ringgit depreciation in the next decade? And what are the best course of investment and action to protect and preserve our savings and buying power, wealth, and enable our deserved retirement rest and happiness? Very good question. I really think that this is right on the spot question. This is the questions of, if I can tweak it around and say, if you think ringgit is going to depreciate, if you think inflation is going to take place, things are going to get more expensive and your purchasing power is going to diminish over time. What do you do? This is the same question. For me, what do? I invest into what will inflate. Let me repeat. I invest into what will inflate. If REITs will inflate in value, I invest in REITs. So I enjoy the inflation. Stock market, especially good stocks, all right? So that is fund manager skill. Good stock, okay, will help you protect your inflations. Okay, we invest in some of the stocks that can be inflation buster, all right? Okay, so thanks for the questions. My advice is, if you really want to get rid of this and this is really disturbing you, very easy. Find the solutions of buying what will go through a high inflation. For example, if you think oil is going to become more expensive, gold is going to become more expensive, food is going to become more expensive, buy a lot more today. All right, okay, next question, let me see. Do we have a REIT fund which is not under PRS? Yes, the two REIT fund that I've mentioned just now, we have it in PRS and we have it in unit trust. The only difference is this. In PRS, we offer free insurance. We want to complement your retirement savings with free insurance. That's why we give it away. All right. I'm 65. What can I invest in? That's a good question. 65 is a number. If you are healthy, if you are mentally good, you may go up to 90 or even 100 years old, and that is another 20 years or 30 years to go. What can you invest in? I think REITs is very safe because it's building and is offering rental income. But if you are that kind of members that, I don't want risks, I cannot take risks, I don't want to see even my condo, my condo next door, the one that I have bought, suddenly price drop a little bit. I cannot take it. If you are that type, then you go conservative. Otherwise, age is just a number. I've seen people who are age 65 continue to be moderate or aggressive or REITs investor. There's nothing wrong with that because the risk and the return actually move quite in tandem. Higher risk, if you can take it, will always give you higher return, especially when you have enough time to go through it. All right, so how do we apply for the free Takafu? Any form to fill in? Good question. Thank you for the questions. The answer is no application needed. As long as you are our PRS member, you are on our record, the insurance coverage is free. It's apply automatically as long as you are in our book. We have got a master policy that says as long as the members are in there, they will cover. All right, you will be covered. Thanks for the questions. What is the sales charge and management fee in Class A and C? All right, we are no longer offering Class A. For Class C, the sales charge is 3%. The management fee is 1.5%. Sally, thanks for typing the answer. Thank you very much. But you know, I'm not sure that is the rate for written in my prospectus. I'm not sure what is the rate if you are going through FSM 1. You know, later on they can help you with this answer. All right. So with that, I hope I have answered all questions that you have posted here. And I want to thank everyone for, you know, being so supportive and listening up to this hour. I want to hand it back to Mark, because Mark, there's a question on charges. Maybe you want to cover that a little bit. Over to you, Mark. Thank you. Thank you, everyone.
Okay, sure. Thanks a lot, Mr. Ng, for your presentation. I believe this will be a quite interesting topic and also a lot of fruitful information that's shared by Mr. Ng. Especially, I take note some like you have to increase your rate of return and you have to start early. And remember the rule of thumb 4% and income replacement ratio about 60 to 70%. Okay, so all this I think will be helpful for you. So, and Mr. Ng already covered most of the questions. And let's say if you guys have any further questions, right, always feel free to drop an email to our Invest Help. So our CIS will and the customer service will assist you further. So when come to the charges, right, actually the sales charge for private retirement scheme is actually zero service charge when you invest in FSM1. And recently and currently we are running a promotion. Okay, there is a promotion which is when you can visit our website to see there is a call touch and go reload pin campaign, where when you invest in a lump sum of 3,000 to enjoy the tax relief as well, and you're able to enjoy you will get it a 40 ringgit of touch and go pin number, and is until 30th November this year.
Okay, so Mark, if I hear it correctly, zero sales charge, tax benefit, and you are giving some goodies away.
Yes, correct. It's a touch and go campaign. Yeah, correct.
Oh, wow.
Yeah, so you can enjoy these campaigns all together, and you can visit our website because you can download the forms. You can download, but you have to submit physically the forms for PRS. And there is a few formless method as well. So all this information is available in our website. Is step by step in details, so you can visit our website to find more information. Okay,
very good.
So yeah, okay, with that I think we come to the end of the section. There is no other things to address here. So first of all, I have to thank again Mr. Ng for your lovely presentation and all the participants who joined this evening. So there are several upcoming seminars with different topics, and all our webinars, even like tomorrow also we have. So you can log into our FSM website, go under the events or fun events to see the details, and you can register. Mostly it's all free seminars. Okay, again, ladies and gentlemen, we hope this section added value tools for your retirement planning and for your investment journey. Thank you and have a great day.